Today, Sam Bankman-Fried enters a plea in the latest round of federal fraud and bribery charges. The U.S. and South Korea are looking to extradite Do Kwon. And as we wrap up this month, we take a look back at all the big crypto events that hit the industry with Alex McDougall of Stablecorp. Welcome to CNBC's Crypto World. I'm Mackenzie Sigalos. Crypto prices reversing course and trading lower today. As of noon Eastern, Bitcoin was still above the $28,000 level, while Ether fell below the $1,800 mark, and XRP was flat. Now, trading volumes of XRP surged on South Korea's top crypto exchanges by volume, including Bithumb and Corbit. The increased interest in the token comes amid speculation that it might be classified as a commodity by the CFTC after the agency classified Bitcoin and Ether as commodities in its lawsuit against Binance. That could impact the SEC's case against Ripple, where that regulator claims that XRP tokens are securities. Okay, let's talk about the top stories. Sam Bankman-Fried pleaded not guilty in New York federal court this morning to 5 additional charges tied to the collapse of FTX and its sister hedge fund Alameda. Earlier this week, the U.S. Attorney's Office for the Southern District of New York unveiled its third round of criminal charges against SBF, this time with a focus on him allegedly bribing a foreign government. Prosecutors accuse SBF of directing the payment of at least $40 million in crypto to one or more Chinese government officials in an effort to unfreeze trading accounts linked to Alameda Research. The disgraced former crypto exec also pleaded not guilty today to other charges tied to bank fraud, money laundering, and making unlawful political contributions. He already pleaded not guilty to 8 other counts. SBF's trial is expected to start in October. Next, OKX says the crypto exchange is turning over $157 million in frozen assets tied to FTX and Alameda to debtors. The second largest crypto exchange by trading volume made the announcement in a news release, responding to a motion filed yesterday in the FTX bankruptcy proceedings. OKX says it welcomes the motion and will continue to cooperate with the FTX debtors and law enforcement officials in the hope that the assets will eventually be returned to FTX users through the bankruptcy process. OKX said that in the days surrounding the collapse of FTX in November, it conducted investigations to identify any FTX-related transactions on its platform. Once assets and accounts tied to the bankrupt firm were discovered, OKX says it moved to freeze the accounts and secure the assets. Last, South Korea and the U.S. are seeking extradition of Do Kwon. That's according to Marko Kovac, the Justice Minister of Montenegro. Kwon, who is a South Korean national, was hit with U.S. charges last week for alleged securities, commodities, and wire fraud, as well as conspiracy. Kovac said Kwon would be extradited only after a trial and any sentence served in Montenegro. Citing the country's interior minister, Bloomberg also reports the Terraform Labs co-founder told Montenegro officials that he and his companion got luxury treatment in other countries during his time on the run. South Korea issued a warrant for Kwon's arrest in September, and his location was unknown until last week when he was reportedly arrested trying to fly to Dubai using falsified travel documents. According to Bloomberg, Montenegro's interior minister said a forged Belgian passport and a South Korean passport in another name were also found. All right, on to our main story. This month saw crypto-friendly banks, Silvergate and Signature, collapse, and the CFTC step up enforcement action when the U.S. regulator sued Binance and the exchange's founder this week for allegedly violating compliance rules to attract U.S. users. So what do all of this month's events mean for the ecosystem? Crypto World's Jordan Smith spoke with Alex McDougall, the founder and CEO of Stablecorp, for insight.
All right, let's just start off with the Binance lawsuit here. What precedent does it set that the CFTC sued the world's largest crypto exchange by trading volume?
Yeah, I mean, I think it's a fascinating time for every platform operating in the space right now. I mean, everybody has really taken sort of 2 points of view on the US in general. Either they've dove in and decided, to make the decision to mud wrestle with regulators, get in there, mix it up, try and go domestic and really create either local platforms or build a US native business. Or they've taken the hands-off approach and said, hey, we have no local platforms or we have no local presence, but they've kind of built the portals by which enterprising American entities can still find those types of platforms. And it's really when when you start to blend those two of getting a little bit too onshore for your offshore entity, that these types of things start to happen. And so I think it's a shot across the bow of everybody who's trying to play that game of, hey, we have no American presence, or we have a defined American presence that has no connection to the mothership. That's being watched, and that's being actively monitored, and that's being actively reviewed. So I think you can sort of contrast it with the Coinbase Wells letter and the Coinbase discussion around a very, very American focus and a very, very domestic platform. And you're going to see different things be brought up. You're going to see different regulations be clarified. You're going to see a lot of things come to light. And I'm fascinated by both of them, but they're both at very different ends of the spectrum. So I think it really says to the market that you're all on notice, and we're about to learn a lot about how you do business.
Yeah, I'm curious, how strong of a case do you think the CFTC has here? I mean, Binance ostensibly doesn't operate in the US. That's what it claims. And it also, Changpeng Zhao has even gone so far as to say that, the headquarters isn't based in the US. The headquarters is wherever I am. So how far can the CFTC go here in this lawsuit?
That's a great question. And I think it's a part of what regulation by enforcement is never the optimal way. But part of what we're about to find out here is what the limits of those jurisdictions are. And our internal transcripts evidence of subversion of rules, and what is that limit? And it's always gray around whether it's monetary transmission receiver licenses, or obviously a little bit more impactful on the securities law side here. But what does it mean to not have a presence, and what does it mean to have a presence? And I think we're about to find that out. I think there's a lot in that complaint, and there's some very concerning allegations around not just the American side of it, but the way Binance operates on a global scale, and whether those are Americanly jurisdictional to be able to talk about. That's another thing that we're about to find out of. You've laid out this laundry list. What's applicable to you as the American regulators versus what is more global public opinion and bringing things to light, and more that we'll need to deal with in sort of an international spectrum as well.
Let's talk about one of the other big stories in recent weeks. We've had many. But the shutdown of Signature and Silvergate. As the crypto industry is sort of looking for a replacement for these banks, where do you think they should be looking?
So another interesting parallel to the Canadian landscape, where we've had a very challenging banking infrastructure for the digital asset world for quite a while, and so it's been very fascinating watching digital asset companies struggle to a certain extent to access those kind of basic core banking solutions in the aftermath of Silvergate, Signature, SVB. And I think what it's really going to do is, as a lot of Canadian companies and a lot of American companies to a certain extent as well, have started to rely on virtual accounts, banking as a service, those abstraction layer accounts that sit on top of traditional core banking solutions. But there's always been this fallback of, okay, well, I'll just get a bank account just in case, and that's where I'll actually do most of my transactions. Now that there's not that fallback option a lot of the time, a lot of the limitations on those banking as a service providers of being able to go from banking as a service account provider 1 to 2 without jumping back into your own banking account in the middle, I think a lot of those are going to start to be forced to be solved. And ultimately, when you're comfortable operating sort of in a virtual account world or banking as a service or something like that as a business, you're 90% of the way to just using digital assets anyways. So I think in many ways, it sort of forces people to just live, really kind of dog food and eat what they're putting out into the market. When you don't have banking as a service, you figure out how to do payroll in digital assets. You figure out how to use a lot of this stuff. So it's painful and it's really challenging. But I think ultimately it's a great sort of litmus test for where are we in digital asset world? How much can we step into this breach?
Yeah. How much do stablecoins specifically benefit long term here? I mean, Tether's dominance we just saw reached a 2-year high, while USDC continues to see a wave of outflows. Can stablecoins replace some of the services that these banks offered, as you're talking about sort of living within the industry?
100%. And I think what this crisis or what this has done is really put risk stratification back on the table. So back in 2008, we looked at banks as, those are the risky ones, those are the less risky ones. Since digital assets have kind of come along, we've kind of lumped all banks together as that's safe. They're in fiat. It's insured. That's the TradFi system. And then crypto as, that's the crazy cowboy structure. And I think what we've started to realize is there's actually a bigger overlap between the two. Is a USDC deposit or a USDC coin safer than some of the riskiest bank deposits? Probably. I would say the answer is probably yes on that. But that would have been an absurd discussion to have even 6 months ago. So I think what it's done is really force people to look at the actual risk inherent in banking systems and the actual risk inherent in the stablecoin structure. And so again, coming from kind of the Canadian landscape with solid banks and an all-time high FX rate, I think that there's actually a lot of impetus towards kind of, okay, I'm going to rely on a company like Circle to manage my banking relationships and who's good and who's not, and have it in treasury bonds and sort of diversify against the traditional financial system for me. And I'm going to run all of my assets in USDC. Saves me the diligence, saves me all of that. So I think there's actually a huge benefit and a huge impetus towards using these types of digital assets. And particularly once you've had a blip of a DPEG and a successful recovery from it, that's just one more kind of tool in the toolkit, but it's challenging.
Yeah. So in the case of USDC, though, I mean, they are facing this wave of redemptions. So what's the challenge there in terms of making the case that it is a safer asset than being in certain banks? I mean, how do they sort of come back from the uncertainty with SVB?
I think it's time, to be perfectly honest. It's time operating at that dollar peg. It's continued disclosure. It's continued, the farther we kind of get away from the event on that side, and just more and more kind of the mindset and the narrative that, hey, this is a digital dollar. The assets are there. As that separates from the fractional reserve type of structure where the assets are there, sort of, aren't there, towards where it almost operates as a fully reserved bank. I think it's going to be there's a mindset and a narrative shift as people are still looking at crypto as risk on. And as that narrative kind of grows and the riskier tail of banks becomes priced higher and becomes a higher risk known, I think that's when you'll start to see that those narratives collide and those narratives merge, and the digital asset and stablecoin narrative really start to emerge as well.
Okay, that's all for Crypto World today, but we will be back again tomorrow, so we'll see you then.